Hey, and welcome into the podcast. I was sitting down with one of my favorite clients early last week, and we were having a conversation about rental properties. And both of us own rental properties, and he actually happens to be one of the top realtors in my area. So I feel like he has a really good handle on the real estate market. And we began to talk about some of the trials and tribulations of being a landlord. In addition to that, talk about some of the great opportunities that do exist in the real estate space. And I thought to myself, as we were having this conversation, what an interesting podcast topic. So, today, what we're going to talk about is real estate. Should you buy rental properties? Are they a good investment? Do they make sense for you? What are the pros and the cons? And how do you make the decision to jump in if you're going to do it? Hey, my name is Jim Martin. I'm a financial advisor and the founder of Martin Wealth Solutions. And I've been doing this for a long time. I have had countless conversations with people about real estate, either to say, hey, I think it's a great idea for you, or pump the brakes a little bit and consider some other things that are out there before making such a weighty decision with your hard earned money. And I'm going to look forward to having this conversation with all of you today. We help people, whether it's with real estate or investments or financial and wealth planning and retirement planning. Although we do not manage the real estate, we certainly give our clients insight in how to protect themselves and make sure they're making the best decisions possible. And that's what we're going to talk about on today's show. How can we help you make those decisions as you're exploring, this really amazing opportunity called real estate? But it doesn't come without some negatives out there or some challenges, if you will, around your plan. And I want to make sure that if you do jump into the real estate market, you do it with your eyes wide open. And let's be honest, there is a huge interest in real estate, and for good reason. People are looking for additional income streams or ways to generate additional net worth. It can make sense as a part of your retirement strategy or of your net worth or accumulation strategy, but there's real challenges as well. So let's talk about the appeals. So I'm going to start with the appeal of owning rental property. So what's the pluses of it? Well, you can get a steady income stream. Now, obviously I know that renters are renters, right? Like they're going to pay or not pay, but you can have a steady income stream, which is really appealing to folks that are in retirement, having a steady stream of income. In addition to that, appreciation potential. Not only will you potentially get cash flow from the properties, but your net worth could theoretically increase, which is really amazing. And it's a non-correlated asset, which I think is really important. So you do get a diversification play inside of that. So when you buy real estate, it's not all hooked up into the market. And one of the reasons why personally I've purchased some real estate along the way is because, my entire life is really tied to the stock market. If you think about it, like we're a fiduciary. So that means ultimately, we're going to be required to act in our client's best interests. So we're a fee-based firm. And when you're a fee-based firm, if the market goes up, you make more money. But if the market goes down, wow, it hurts you as well. So, just like that Fisher investment ad that is very popular, it says, when you do better, we do better. It's the same thing. But when our clients do worse, well, we generally will do worse as well. And having non-correlated assets can be appealing to most investors, whether you're me, who not only is my business, but my investments are tied to the market, but also people at home who, ultimately, they just want a little bit of a diversification outside of the market because they don't love the ups and downs. Now, I would tend to say that you've got to put that in context. The reality is real estate prices go up and down as well. Maybe not as much as the market, right? But they certainly do. All we have to do is look back to 2008 or 9 and saw real estate prices, fall off a cliff. But it certainly hasn't happened in the last 15 years. Real estate seems like it's been on this crazy upward trajectory. So you can definitely see appreciation and you get some diversification. And then I think the last benefit is the tax benefits. You're going to have some tax deductions potentially, including mortgage interest or property taxes or maintenance costs. You can also potentially depreciate your real estate as well. So there are some real appealing features to real estate, that steady stream of income. That can be really powerful, especially in retirement where the paychecks stop and you're ultimately just trying to create more income. That can be really, really appealing. In addition to that, the appreciation, being able to see your net worth appreciate over time. The tax benefits can be really, really powerful, especially if you're at a high income. Look, less impactful if your income is lower, but really ultimately can be really, really impactful if you're at a high income level. And then diversification, having some non-correlated, non-market based investments. That can be really powerful, but there are some challenges, right? Like, so that sounds almost too good to be true. Hey, I like that. Let me sign up for that. Let's talk about the challenges of owning real estate as well. And I think those are real. The initial investment, you're going to need to have a substantial amount of money to put into it. Like, interest rates are really high, like really high right now. It's not a great time if you're not sitting on a mountain of cash to take all that money and just throw it in the market, or I'm sorry, into real estate. The fact is you are going to see interest rates somewhere 6.5 to 7.5 at the time of this recording, maybe higher based upon if it's a second home or a rental. So really at the end of the day, it can really jack up the cost of owning that piece of property. So the initial investment, and that doesn't even include the upfront, like you're going to need to put money down on this piece of property. And you might also have to do some upfront maintenance costs. You're going to have potential renovations, because let's be clear, like most people, when they buy their first rental, they're not going out and buying like this amazing, lovely, great like place. Right? Most folks are looking at distressed properties. And because you're looking potentially at distressed properties, the cost of getting that up to snuff might be very high. The realtor I was having a conversation with, he said, hey, I actually kind of overbuild my properties. I put a lot of money into them to make sure they're really nice. In fact, I think his line, which I really appreciated, was when I get a piece of property, I want to know that if I needed a place to live, I'd want to live there too. And it doesn't have to be like the Taj Mahal, like my normal house, but I'd have to be proud to live there. And I think it's a really nice way to approach it. And he said, I don't want to be a slumlord. And I work with a lot of realtors a lot of them are hooked up with our firm, and we work with them. And I really appreciate the ones I work with in a big way. I've got a couple of realtors that I call friends, and I think they do great jobs for their clients. And they approach it the same way. And I really appreciate people that look at it from that sense. They don't want to be slumlords, but it's okay to be. I mean, that's not the end of the world, but just know that the initial cost is real. Like, it's a real number. Whether you fully fund it, like Dave Ramsey says, he says, don't buy a rental unless you have all of the money to put down on it. Or if you're going to get a mortgage out on it, just understand the carry cost of that will cut into your gross profit margin at the end of the day. And then beyond that, you're going to have the maintenance and the management of this. Like, maintenance costs are real. Renters don't have pride of ownership. When they live there, they're either going to take care of the place or they're not. And generally speaking, renters are, they don't own it. So they don't treat it the same way you and I would. So it might be a situation where you have ongoing costs to replace the carpet or to change the washer and dryers or the refrigerator or the stove. If you name it, I've had this come up. Like, I've had to fix everything in my rentals, and it can be quite frankly, a pain. It can be very expensive. It can cut down on your return in a big way. I mean, think about this. If you're charging $1,000 a month in rent, and all of a sudden somebody moves out and you have to go spend $3,500 replacing the carpet, then it's going to take you 4 months to catch back up. And that's going to really hurt it, especially if you have high turnover, meaning that you're constantly turning over your tenants. Now, a lot of people will say, well, I don't do carpet, I do LVT or whatever. It's still the same. There's still ongoing maintenance costs. So I think you need to be really well aware of that. So when you're going to do your projections on if it makes sense, you need to factor in 2 or 3 things that are really important. Number one, you need to factor in vacancies. You're not always 100% going to have 100% occupancy of your unit. It just doesn't happen. It's not going to happen. You also need to factor in maintenance costs along the way, because that's real. Like, you're going to have to fix this place as you go through and address it over time. So you're going to factor in vacancy, you got to factor in maintenance costs, and you got to factor in all of the other stuff, the taxes and the management and everything else. And like, if you're going to use a management company, that's another question you've got to ask yourself. Like, I use a management company for my real estate, and they're terrible. And if they listen to this podcast, I mean, I've told them they're terrible. They don't care about the units. The only thing they care about is collecting the rent, because that's how they get paid. And even then, they don't really care about that half the time. So I think they're better done on your own. So if you self-manage it, but if you self-manage it, you're going to get a call at 10 o'clock at night because the water heater's broken, and you're going to have to figure that out. You're either going to have to go out and do it, or you're going to have to find somebody to do it for you. And that can be very costly. So those are some of the challenges. So another challenge is market risk. The markets are relatively high right now. What if the real estate market pulls back 20 or 30%? That could be a real challenge. That could be a real problem for you if all of a sudden you're buying it for appreciation and it pulls back. Now, a lot of people don't expect that to happen, but it could. And I think that's the important thing. Like where the price is today is not a guarantee of where it will be tomorrow. So be aware of the market risk. And I think another one, again, vacancy and tenant issues. Now, I've already talked about vacancy a little bit, but tenant issues. Like you got a tenant that is in your unit that's not paying, you're going to have some legal costs potentially to get them out of there. It's really hard. And depending upon the state you have, those tenant laws could be very favorable to the person who owns the property. Or I'm sorry, to the person who's renting, not the person who owns. And that's a challenge for people who own it as a business. And if you're very tight on your cash flow, it could really impact your ability to get somebody out that's not paying. In fact, just look back to COVID time. My renters at COVID time, thankfully, most of them paid, but not all of them did. And they didn't have to. I couldn't even kick them out. They were just living there rent free. Now, sure, there was some government programs that I could help them apply for, but they actually had to take action. Otherwise, they were stuck. I had to actually go through a process to kick them out, an eviction process. So that meant I had to hire an attorney. I had to go through the process of getting them out. I had to show up to court. It's a real pain. That's a challenge. I don't want that. That is not why I bought real estate, right? Like to make it a part-time job. But it's something out there that you have to consider that is important. And then that kind of brings me to the last risk, governmental risk. I used to be really high on real estate. Used to really love the conceptual idea of it until we got to COVID. And then all of a sudden during COVID, the government has shown this idea that they can let people live in my building rent-free. Like I don't have any say on it. They can just live there. And I don't like that. I got to be clear. Like the next time something bad happens, we go into a big recession or depression, like that can happen again. And that's really scary. Those are the cons against owning real estate. Obviously, there's more than I listed, but I feel like those are the big ones, the ones that you really ought to consider before making a purchase. Now, let me talk about some factors that I want you to consider before you actually invest in a property, because I think this is really important. Location matters. Again, you're going to start to look for rental properties, and there's going to be some out there. And the cheap ones are usually distressed or not great areas, which means your tenants might not be ideal. So location really matters. You want to choose the right location with the right amount of demand, the right amount of property values. You also don't want to select something that is not going to make the math work. Sometimes people get very emotionally invested in the fact that they're going to own a rental business. Like they're just going to do it. But the math doesn't work, but they still do it. So they end up having a really bad investment. So let's use this as an idea. Let's imagine you put, I don't know, $200,000 into a house, but you're only collecting $1,000 a month in rent. That is not a good investment for real estate. And I just don't think that's a great choice. Now, there's a lot of ways. You can look at cap rates. You can look at the 1% rule. There's a lot of rules out there. And what the 1% rule says, and I don't know that it applies in today's market as much as it used to, but this is how I approach looking at rentals. I'd want to get 1% of the value out in a monthly rent. So, example, $100,000 piece of property, I'd want $1,000 a month in rent. $200,000, I'd want $2, $300,000, $3. You get the idea. Obviously, that number can go down or up depending upon the location of the property. But at the end of the day, you still have to make the money work. If you're going to outlay, let's say $300,000 in cash to buy a piece of property, I want to have a good return on that. And that return, understand, you've got to then subtract all the other costs associated with it before you get to your true return. So understand that before you make the purchase. So location matters. The time commitment. Look, if you're stressed out for time and you don't have time to do things that are important to you now, to work out, to spend time with the family, to work around the house, your house is falling apart, all these other things, it's a real time commitment, a rental. You're buying another business. It's a job, really, at the end of the day. The other factor is financial stability. Make sure you're in a really good situation before you do this. You don't want to go out and buy a rental, and then all of a sudden the government say, hey, people don't have to pay. And then the bank, by the way, when that happened, when the government said, hey, you don't have to pay, the people with mortgages still had to come up with the money. They had to raid their 401ks or their IRAs or their checking or savings or their emergency funds, make sure you're financially stable before you go out and embark on starting your rental empire. I think it's really important. And here's the other one, your exit strategy. I know nobody ever thinks about that with a business, but every business in the world needs to have an exit strategy for the owner. Like whether that's Procter & Gamble or Martin Wealth Solutions or your real estate business, it needs to have an exit strategy. At some point, you're not going to be here to run it. Like eventually, I'm going to get old. Like I plan to live forever. It's worked so far, but eventually I'm going to get old and I have to have a succession plan for my business. And I do. And I feel very fortunate to have great people that I work with, that have a succession plan. And hopefully I don't have to think about this for 25 years, but the same thing is true of your rental income, because eventually you might get old and you might not like the idea of managing rental properties. You might have to talk about when you sell them and how you sell them and what it looks like. And do your kids want this business and what does that all look like? So you need to think about having an exit strategy. And then the other thing that I think is really important factor to consider, and this is difficult, but I like to talk about rentals. I think it makes sense to do when you're younger. So if you're a Gen Xer, a millennial, maybe it makes sense. If you're just retiring now and you're 65 years old, maybe not as much. And here's the reason. I actually don't love the idea of somebody owning like a singular rental. I can get it when you're younger. It's like a great way to have a price appreciation. But really, when we're younger, we don't really care about the cash flow as much. We care about the net worth appreciation, right? Like that's one of the big values of buying real estate is when you invest, you have some appreciation. Not as important when you're, say, 65, right? You're more worried about the cash flow. And the biggest challenge is if you get a mortgage, you're not going to have like real cash flow. So what you're really doing is taking a chunk of money, buying a piece of property, and then getting the operating cash flow of that. But interest rates are relatively high right now. So it like changes the math of like, should I put it in, an investment that pays 6% over the next 5 or 6 or 7 or 10 years? Or should I put it in a real estate project that's going to pay 7 or 8% on it, but I'm going to have all the problems along the way? I'm not telling you not to do it. I'm just telling you that the sooner you get started, the better off, because the more properties you have, the easier it is to scale the business. It becomes a nuisance. Like if you're worth $2 million, I'm just throwing numbers out here, but if you're worth $2 million and you have this one singular rental property that's kicking off $500 a month in extra income to you, it's really almost a nuisance in some ways, because it's not going to do enough to like change your life, but it's going to do just enough to annoy you when you're on the trip or you're on your weekend or whatever that is. So when you're going to think about starting a business like this, and this is a business, make no mistake, it can be a part-time business and you can do it small. Just understand that it does work better with scale. But again, I'm a business builder, so I like to look at things in a big way. Like if I'm going to do something, buddy, I go all in. Like I want it to work. You don't have to do it that way. I get that you can do it smaller, especially if you're handy. Like, right, if you love like working on things and you're handy and this is part of your DNA, then a rental can make a lot of sense for you, because like you probably are okay to go over and replace the deck and change the floors and fix the water heater. I can do that stuff, but I don't like doing that stuff. Like I do it because, it's one of those things like, I want to do it like Tim the Tool Man, like I'll do this stuff, but I don't get charged out of that. That's not something that gets me going personally. So I think it's really important. Now, I will tell you that I've sat down with people. I'm going to give you 2 stories. I've sat down with a couple who came in and they started buying rental properties. Now, the time was important. Like everything, when you purchase things is super important here. Buying them at the top of the market, I'm not quite sure is the smartest move on the planet. But this individual ended up buying 10 different rental properties. And they bought these when the market was much lower than it is today. And they're leveraging that cash flow in retirement to live a retirement they never really thought was possible. Because now what's happened is those properties have appreciated over time, and they're creating a lot of additional cash flow on top of their pension and their distributions from their IRAs and 401ks. And it helps them live a much better life than they would have otherwise. And it's going to leave a great inheritance for their kids, because those properties that they might have put $1 million into, 8 or 9 years ago are now worth $2 million because the darn market is up so high. So I think it can really work well for people that are out there. Now, with that said, I did sit down with a lovely couple a couple months ago, and we had a conversation about their investments. And they had went out and bought one rental property right at the top of the market. So they just bought it recently. And they do have a renter in there, but their renter is just barely covering the mortgage. And I said, how's the rental business? Well, Jim, we're breaking even, so we're doing good. I said, oh, well, that's great. Yeah, but our renter needs to move out in the next 6 months. So we're going to have to start over. And they've wrecked the carpet. And, at the end of the day, I've had to go out there twice and fix things on the house. Like, I really thought rental or real estate was going to be easier. And, that's one of the things or questions you need to ask yourself is, do you really want a part-time job? Do you really have somebody you can trust to manage this for you? I don't know the answer to that. And obviously, we've not even gotten into the part-time rentals like the Airbnbs and the VRBOs and things like that, which we can talk about in a different show. But I think it's really important to understand that there are some challenges out there with those, and you can overcome them if you manage these properties appropriately and if you make good decisions on the front end, and if you really ultimately do some analysis to make sure you really want to have a rental business, because it is a business. You've got to approach it. You're going to have somebody that's going to rely on you to fix the heat pump, to make sure that the grass is mowed, all of these things in this house, because that's what happens when you have a renter. They expect it to work decently. Now, there are some alternatives to rental markets. There are real estate investment trusts, so REITs, those do exist, and it can give you exposure inside of the real estate market, maybe at a little bit higher cost, but ultimately can give you exposure. If you've always wanted exposure, it can do this. And there are some additional passive income options out there. You can think about dividend paying stocks. Like, a lot of my clients love the idea of passive income, and who wouldn't? Like, who doesn't love the idea of like sitting around on Tuesday and getting paid for not going to work? It's an amazing thing. So dividend paying stocks can be a really great passive income tool. Bonds or annuities could also provide income in retirement. Those can be really good. Now, it's important you understand the pros and the cons and the costs and the commissions and everything that's wrapped up in those. But a lot of people I meet with, they love the idea of passive income, but you do have to work for it. So I call it passive income for real estate. And it is for the most part. Like, it's usually a pretty darn good investment if you do it early enough in your life and you hit the timing right in the market and you're willing to work for it. But with that said, there are some amazing other ways to create passive income in a tax advantage way that do exist in the world. So I do think that exists for the right person and the right investments. So don't write those off as you think about your plan. But look, those are some of the pros and the cons. And I think it's important. Remember, understand before you make a decision to jump into real estate. Understand the pros. What's the great thing about it? The steady stream of income, the appreciation potential, the tax benefits, the diversification. Those can be really appealing. And sometimes people can get tunnel vision and forget that there are some dark sides. I don't know if there's dark sides, but there's some downsides to real estate. And some of those downsides, it can be that initial investment, which is hefty. It can be the maintenance and the management of the property. It can be the market risk associated with it. Don't think you're not going to have market risk with real estate. You absolutely do. The vacancy and the tenant issues that can come up, the governmental interference that's along the way. So those are things that can really derail you in this situation. So just be aware of the pros and the cons before you make decisions. I hope this was helpful. Thanks so much for watching the podcast or listening to it. And by the way, if you've not checked out our YouTube channel, we do air this on YouTube. And that's at Martin Wealth Solutions on YouTube. So just search for Martin Wealth Solutions and you'll find us, or it's at Martin Wealth on YouTube. And if you're watching this on YouTube and you want to subscribe to our podcast, that's going to be in the show notes below as well. Hey, I want to thank you for taking the time to listen to this. Leave us a 5-star review, like, and subscribe. If you have any questions you want to connect with us, that'll be down in the show notes or in the description below YouTube. Hey, thanks so much. Remember, plan well and retire happy.
We appreciate you joining us today for this episode of the podcast. Opinions voiced in this podcast are provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. There is no assurance that any investment strategy will achieve its objectives. Information provided is not intended as tax or legal advice. you are encouraged to seek tax or legal advice from an independent professional. We are not affiliated with Social Security or any governmental agency. New River Financial Group, LLC is a registered investment advisor offering advisory services in the state of Virginia and other jurisdictions where exempted. New River Financial Group, LLC, doing business as Martin Wealth Solutions. Investing involves risk, including the loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining value.